Hey guys, today is Tuesday, August 11, 2020. Let's take a look at the market right now. The market has closed. It's 9 p.m. So let's take a look. As you can see, the S&P 500, it broke this trend line today. We had a flash correction here. It broke the trend line, came down, and now is just hovering in this level. I don't think this correction is over. I think we're gonna go further down to 32.68. Hopefully we can retest this one, and the market might hovering around that area. Again, we have closed this gap, right? So I don't see the market in a euphoric state, to be honest. I'm seeing the market in a state like this. So you can see that here we have corrections once, we have twice, we have three times, came back again for a long time. That was a February 5th to February 20th. So this duration, I think we're in this mode right now, and this could last a long time. It could last, this one's 82 days. This is almost 3 months, right? So I don't know if we can have a significant correction until maybe 3 months from now, right? And this condition could stay for a long time if we don't have any catalyst for the market to go down. For the market to go down, sometimes it could just fall apart, like this. When the market is going vertical, it could fall apart. If the slope is too high, like this, right? So if you're seeing market like going like this, so normally the market is like that. Then after that, that's the normal slope, right? If you look at this. But then when the market is taking off and went too far away from a normal trajectory, it's bound to have a correction, right? Because it went up too much, too fast in such a short period of time. And it's just impossible for the market to maintain that kind of rate of growth, right? Because on average, the market goes up by 8% or 10% every year, and that 10% or 8% is actually relevant to the growth in the money supply. And like right now, the market, obviously the government has doubled the money supply. So, but there is limitation to the effect of that money supply on the market, right? Because part of that goes into the economy. A lot of that actually get into the market. But if the market the returns too high, and too quick, look like if we have one of these, the correction is going to be more severe. And so far, I don't see that happening. I think this slope is maintainable if we maintain this slope, and we can have a just hovering around this line for a long time until November-ish. And if we are hovering around this line until November, we could be having, for example, November 9th, we could have a year-to-date return. So this is January. This is January 2nd. Year-to-date return of 14%, right? So the market doesn't have to deviate from this trajectory. The market could just keep going along this line, which is mathematically plausible, because from annual return basis for the S&P 500, if it could stay within from a year-to-date return of around 10%, that is a logical return. That is a maintainable return. That is a return that's not going to cause another large correction, right? So if we can, go to maintain this trajectory, we're looking at a year-to-date of 14% return. So that is still going to probably leads to a correction by the end of this year to do some sort of mean reversion in the market. I think this rally has been going on for this rally. The slope of this rally is much more steep than the past ones. If you look at this, if you look at all these, the past slope, and we are converging against this long-term slope that I just drew. You can see that here, right? So yeah, of course we're gonna have a larger correction probably by the time we reach this slope, we reach the long-term trajectory. Of course, there are people who are suggesting we might have a larger correction in August because that's historically speaking we have a seasonality effect where the August, September, and October, these 3 months are prone to market crashes, right? For example, 2008 market crash was in September, and 1987 market crash was in October, and 1929 crash before the Great Depression happened in October as well. So these months are kind of critical, but in my opinion, I don't see any signs that this market is heading for major crash without another catalyst. Okay, so let's take a look at Nasdaq. Nasdaq, again, we have a volatility, we have a range expansion. The volatility is actually not expanding. The volatility is the same, but we have a range expansion here for Nasdaq. As you can see, it hasn't really reached my target yet, and right now it's actually doing a healthy correction through time. I think Nasdaq could just keep hovering and continue to maintain this particular level. I wouldn't say it might not go up. It could just maintain at this level until September, and then slowly moving up again. But again, from a long-term perspective, from a logarithmic perspective, you can see that here, the Nasdaq is actually. So if we look at that in a weekly perspective, we are slightly above the long-term trend line. If you look at this from an logarithmic perspective. So for Nasdaq, if we head even higher, we might have a reversion to the mean. And so this level is kind of dangerous, just even by looking at this logarithmically. Let me see here. But the thing is, for Nasdaq, you can see that here that it could go even crazier. So you can't really base on this trend. Okay. So let me just get the NDX here, which has a longer history. So let's take a look at logarithmically. So you can see that the Nasdaq obviously followed this trend for a long time between 1985 to 1996, but then it took another direction, right? It took a much higher slope from 1996 to the 2000. That was the dot-com bubble. You can see that here. We are doing something kind of similar. We have a kind of long-term slope like that, literally parallel to the growth rate. You can see that these two slopes are parallel, and we cannot rule out this situation happening. From right now, the Nasdaq could outperform, could be taking another completely different slope. I know it's kind of hard to believe that after all these years of growth, we don't get a significant pullback, but that's exactly what happened from 1985 to 1996. That was 10 years. You can see that from here, 2010 to 2020. That was 10 years, and after 10 years, not only Nasdaq in that period didn't crash, it actually the rate of growth actually changed, and it went up even crazier at a crazier rate. So this could last for a long time if if history is a reference, right? So this could be a, you know, a 1,499 days. So this could be 1,499 days. So we do not want to rule out this possibility that the NASA could go crazy going up. Okay. All right, and that would be the end of the bull market if we take this, if we continue down this path. Okay. I think this is actually a very good chart to see how this market is working. And this is a very high probability in my opinion. It kind of makes sense to me given how much money that's being printed out. It has to go somewhere, and in the next couple of years, I think it's gonna go to, you know, mostly technology companies, and the valuation could go, you know, insane again, crazier than right now. Okay, so that is my analysis for the stock market. Let's take a look at all the other companies. My work obviously is down. It's down, and from weekly perspective, you can see that this thing is down from a weekly perspective, so it's a very bearish chart right now from a technical standpoint. I don't recommend add to this company for sure. Don't add to it. If you have it, just hold on to it. Anything else? Let's take a look at Tesla, all the other stuff. So today we had a correction across the technology sector, right? So we have Tesla that's going down. But I want to point you guys to this, is that after it had a bounce, it seems that this support is still being held, right? You can see this graph I drew a while ago, and I expect this thing to hover around this level, and then just consolidate through time. Not going to consolidate through price decrease this time. I think there are so much money on sidelines, and they are just buying these kind of dips. And I think Tesla's going to consolidate horizontally for maybe until end of this year. Then maybe beginning of next year, it's going to start move again. Okay. Yeah. So pretty much everything else is down today. Is down. Let's take a look at cryptocurrency now. So Bitcoin is down a lot as well during the day. I gotta say, this is not something I expected, that we're going to consolidate that violently around this level. But again, Bitcoin is a huge stock. Sorry, not huge stock, huge. The market cap is $200 billion, right? And it's very difficult to move the price up further until, you know, we do some sort of shakeout at these levels. And I believe this is just consolidation through time. It's trying to shake people out. These kind of 8% moves is going to shake a lot of people out, thinking, you know, it's going to go down again. But if you've been watching this channel, you can see this from a historical perspective, that this I believe is the beginning of a further move to upside. Okay. Because we have this really good shakeout here. Okay, XAU USD. Let's compare Bitcoin with gold. So gold broke out as well. Yeah. And now I think his resistance came down. Yeah, for gold is retesting this previous high. So this makes sense, right? Okay. Ethereum. Ethereum, not much going on. Again, I've been talking about Ethereum here. So I've been talking about Ethereum. That Ethereum, we have a sellers at 400. I have a friend of mine who owns a cryptocurrency exchange. He knows that a lot of sellers at 400, and as you can see, I don't need my friend to tell me that there are sellers 400 because I can just look at the chart and tell, right? We also see a lot of buyers at 364. The buyers are pretty aggressive at 664, 665-ish. The reason you can see that every time we touch there, the bounce is pretty quick, right? We have a quick bounce to 400, then buyers trying to buy, boom. The sellers are selling, buyer exhausted, came down, but buyer now has a bargain, buy up again, exhausted, came down, now they're buying again. It might get exhausted, but I don't think the third try, I think the third try the buyer is going to take over the control. I think by the time, get to this weekend, by the time the buyer can exert control, I think the market is going to bounce, not a bounce, I mean it's going to push to a very high level. It's going to zoom through the resistance. As you can see that here, same thing. The buyers are buying at, previously the buyers are buying at, what is this level, 217-ish? Price, lots of people selling at 250, right? Came down, buyers start buying 270, just bounce out right away. We know there's some really strong whales at these levels. Came down again, got exhausted, came down again, buyers buying at 217 again. Came up again, so try it 1 time, 3 times, 2 times, 3 times, 1 time, 2 times, 3 times. We have 1 time, the first rally, 1 time, failed, but found buyer here. Tried again, second time, we have a second time here. Failed again, tried again, third time, now failed again. Now we are trying the 4th time here. I think the 4th time is probably gonna go through the resistance here at the 400. And 400 is just really a psychological level if you think about it. For the computers, 400 doesn't mean anything, right? 400, 401, 402, it's just a number for the computers. The 400, these whole numbers, 250, 400, they're just a number in the human psyche that they exist, these kind of resistance. But from a long-term perspective, these resistance are irrelevant to our long-term investment purpose. Okay. And yeah, so I think the Ethereum is going to run through that probably over the weekend again. And because the weekend you have a low volume, you have a thin trading activities from Wall Street, from all the other hedge funds. These funds are probably people taking vacations over the weekend, so it's much easier to push price to a much higher level over the weekend. So I expect the next round up to be above 500. It's very highly likely. If we do fail again, I think we're going to go down to retest maybe to 318 again. But I think that scenario is not as likely as we zoom through the 400 to really attract more buyers, because some buyers are just waiting on the sidelines. If the price starts zooming vertically, people are going to be attracted to it. People are going to be, FOMO. So that's something more likely that's going to happen. And again, from a market structure perspective, you see that we have been retesting the long-term resistance here. You can see that this is a very important level here, the 378 level, and we've been retesting that over and over. It seems that this level is holding, and we are going to move much higher from this point on. Okay, and I want to bring you guys to attention to this one. we have once, twice, 3 times, then we broke through. See that? So here it could be similar. We have once, twice, 3 times, we broke through. Okay. And that's all I want to talk about today, and I hope you guys enjoyed the video, and see you next time.